Jeff Schumacher, founder of BCG Digital Ventures. Digital Ventures is the world's largest and I believe most successful digital foundry. It's got 1,100 people. We've launched or founded 120 companies. And then we just recently started 55 Foundry, which will be the world's largest decentralized foundry with a capital arm of $500 million and building the infrastructure that we hope will be the new decentralized economies.
I'm trying to speak louder. Do you hear well?
Yes.
No. But you sit close.
Okay. So take your... yes.
So my name is Albert Menkveld. I'm a professor of finance at VU Amsterdam. I've long been interested in trading, and my research so far has been on electronification of trading, high-frequency trading. I've looked at clearing, where blockchain is potentially a good solution. And most recently, I've done a project on the valuation of bitcoins, of cryptocurrencies. Look forward to the panel discussion.
Okay.
I'm Anthony Scaramucci, the founder of SkyBridge Capital and former Trump administration official for 11 days. By the way, don't say 10 because you'll hurt my feelings.
I'm Keyu. I'm a professor of economics at the London School of Economics. I am a macroeconomist, and I also study the Chinese economy. And these days, I'm also thinking about how to write economic frameworks for blockchain and the token economy.
My name is Bjoern. I work for a company, or I'm a partner in the company. We are an independent specialist on alternative multi-manager solutions. We have an additional department where we focus on quantitative trading. That's what I do. So we develop systematic trading strategies, which we trade basically fully automated.
Yeah, we are releasing HFT API on LATOKEN.
No, we're not doing high frequency. I'm not such a strong believer. We can come back to that later. So, yeah, we don't do that. But we are very active. So.
Thanks. We learn about you. Okay, guys. Who has
I talked too much already.
So this is a chance to give another perspective.
Yeah, well, the other perspective comes from me as a former manager, startup investor, and a computer engineer. I'm not a president on this panel.
Great. Guys, who has a view to start with? What will be in 2 years? Or next year? It's already next year. Yes. What will change in the markets? Everybody comes to listen, right? All right.
Well, if you want me to go, I'll go.
Yeah.
I don't see a lot of change between this year and last year as far as decentralization. We don't see the tech advancing fast enough. So I think we have a longer play. I think it's in some ways not as bad as autonomous cars, where those might be working on a Tuesday in Phoenix on a sunny day. We're still needing to see the performance of these decentralized platforms come up to the level of what centralized has. And there are things coming, but I don't think you're going to see a lot of change between this year and next year. And I think our window is where we're looking at is probably 3 years before we start to see real movement. And then probably another 3 years post that before you start seeing real scale.
Okay, I changed the name of panel Capital Markets to 2025.
Yes, that might work.
So I think that what is really needed is for people to trust a new way of interacting in digital assets. Of course, what hasn't helped is that the cryptocurrencies themselves have not done well in terms of valuation recently. But it's good to have discussions like these to clarify what the benefits are and the scalability solutions that the industry needs to come up with to make this a really viable a marketplace. So I'm looking forward to what's coming there.
So I think that it's not a long enough time frame, actually. So I think the real question would be, where will we be in 10 years? Because when I look at this as a money manager, and I've been a money manager for the last 30 years, this is reminiscent to what was going on with Netscape in the 1995 era. It's still very nascent. Activity got sloppy. There was a recession in the technology area in the internet and the bubble starting in March of 2000. Things got very, very sloppy, and a lot of companies got washed out in that situation, and maybe some of the security tokens or the digital currencies will get washed out. But I think you're either a believer that the future exists where you're going to have these decentralized, independent, autonomous, and anonymous transactions, which will totally change the world, or you don't. And I think if you don't believe, I think you're going to miss something staggering, like many people did in the mid-90s into the 2000 period.
Yeah, I think if you also look at capital markets industry per se, it's an industry that's more conservative. It's a bit slower. It's not as quick and disruptive as other industries. And one of the reasons is because it's such a fundamental part of the whole economy. So I think we cannot expect the same path or the same speed we will have in other industries in the capital markets. I also think, coming to the example Anthony gave about Netscape, I think there's also there's a difference in what happened in when the internet came up, because I think in some way the internet came up and there was no regulation. So the regulation is basically now catching up. Now we get all the regulation nobody thought about 20, 25 years ago when the internet started. But in the capital markets, we have a very strong regulation in place already. So it's the other way around. And that's why I think the regulators and the government stepping in much earlier. And that's why I think that the speed and the development is going to be a little bit different.
I think the way you grow programs the way you fall after. And let me give you an example. For example, if you look at the period between 2000 and 2008, real estate prices in Germany were growing up for 10 years, 18%, 1.8 a year. In Ireland, been growing 180%. So 18% a year. When the crisis hit, the Germans were staying on the ground, very stable, nothing happened. Ireland was falling from the 10th floor, like this. Banks collapsed, even the country was bankrupting. My point is that we're now growing fast, but we are programming with this growth what will happen after. I'm not saying it's going to collapse, but the way you grow programs what happens after. The way Greece was growing, taking a lot of credits not to bring to productive, but increasing salaries, pensions, and this and that, programmed the way they fell after. So now, another example is if you want to run very successfully on a long run, because blockchain is not a short run, then you better, sometimes you have a very strong start and then you fail very quickly. So probably the best strategy is have a decent start, move in a way to know that you have a lot of breath to continue in order to have a strong final. I expect the next 2-3 years to be very problematic because we have the situation that thousands of ICOs happened. Actually, a lot of capitals have been brought on the table. And if you look at the normal market, 1 to 5% of all the startups continue living. We are going to face exactly this in the blockchain companies. They started up in 2017, 2018, big time, and the truth is coming to many of them. Is it going to be a problem? No, because this is the way we work. An idea has to be given a chance. You need, if you want to fly, you need to raise the bar, so at least you try to jump. And probably if you jump, then you can fly. And we jumped. I'm not sure we're flying, but we have to do our best to do so. And because of that, we need a lot of hard work of those thousands and hundreds of thousands of talented computer programmers that went to blockchain. We need to perform. We need to bring results. We need to make stories. We need to have success stories. And the others who fail, they will. And then I think we will mature of looking to a broader future.
I think if I may, I think there's a lot of activity already, like you were saying. I think what needs to be clarified is really the inner workings of the blockchain technology. So how is it that it provides the solution?
Yeah.
And here, we academics can contribute. We can actually help. If you give us some access to data, and this is sort of an invitation, to clarify how these transactions are processed, how many people participate, that the whole community works better if more people participate and trust the system. I mean, let me give you an example. This is not just ivory tower talk. It's one. What you saw with HFT, there was a lot of high-frequency trading. We remember the discussions and the scandals around it. And people didn't understand what it was until there was finally a reach out to the community of academics to make some data available. And we showed that there was also contribution of HFT in the sense of market making at high speeds and putting capital at risk. So I think we need an initiative like that for people to buy into this and have mass participation in this technology.
Yeah.
I just want to bring the point that I want to remind everybody that it's been 10 years since we've had a financial crisis, a real financial crisis, and we're about to be due one financial crisis. It's hard to mark which year and exactly what time. I think there are enough geopolitical risks and risks of all sorts that could potentially trigger a recession. And as assets are all correlated around the world and across asset classes, this is something in the macro background to keep in mind when we talk about the short term next couple years and how it's going to affect this particular sector. But I thought maybe I could make a few separate remarks, and I'll come from the angle of a macroeconomist, but also somebody who works closely with the policymakers. And indeed, I hear a lot of the discussion, this being a very central discussion around central banks and policies, is how to really make of this, right? Because on the one hand, financial innovation has always come as a double-edged sword. When we have invented credit cards and the arrival of ATM, and of course that has brought a great amount of welfare to human beings. But it's also financial innovation that has invented the ability to buy subprime mortgages, and which led to an onslaught of financial crises. And indeed, the Great Recession, some of it, at least some people believe, is attributed to financial innovation. So it is a double-edged sword, and this is why policymakers are especially careful. Now, for this community, it's important to bring on kind of, the quality, the high quality, the ones with fundamental, really offering services and with real fundamentals to the community to convince that this is a fundamental technological revolution, which many policymakers are able to believe. Now, one of the most important and most severe problems of today, and indeed this is the reasons we see the rise of populism, even the trade war, and many other ongoing issues, is the rising inequality. And a lot of the inequality in the developed world is due to capital income inequality. And I find that, given this topic that we're particularly talking about, the tokenization, the token economy, and assets, one way to reduce this inequality is really to give people, ordinary people, access to different kind of financial assets that would otherwise, or financial, or whatever kind of tangible and intangible assets that would otherwise not be available. And it's not just in terms of assets, but many things that blockchain can deliver is to really, in terms of tokens, is to really bring about benefits to a wider range, a wider group of people who can enjoy the upside. Because right now, as we see inequality even increasing over time because of technology, a lot of this profits is going into the hands of very few. And I see that blockchain as a potential, at least from the macro level, to serve as a purpose to divide the wealth into a greater number of participants. But I'll come back to what are some of the issues that policymakers might be concerned about, but just to understand that financial innovation is a double-edged sword, and we should keep that in mind.
Guys, you are too disciplined. So, please take the lead for discussion.
I'm definitely not too disciplined, trust me.
Oh, show it. Okay. Or I will ask about this 11 days.
Well, I mean, the good news is it's way behind me now. I still have a little bit of Cheeto stain on my hand from the the orange, but it's fine. Here's what I would say to you, though, about the financial crisis that's coming. There is a crisis of liquidity in the markets. And so as you're innovating and you're creating digital currencies, you have to be mindful of the fact that the high-frequency trading volumes are actually masking a shortage of liquidity. And so when markets are going through rough periods of time, they're gapping down 8, 9%. And so one of the weird things about what's happened in our society is that the Volcker rule, by taking all the investment in commercial banks out of the marketplace, they've wounded the liquidity in the overall market. So when that crisis hits, just be very careful in those ETFs, because when those baskets uncouple from the underlying securities, which happened in August of 2015, and you saw 26, 28-point drops in things like Facebook and Google, when it happens, there'll be another rush for regulation, and there'll be another issue in layers. And you have to also remember this. We went through 10 years now where the entire world shifted from more or less 50-50 active management to inactive management to now about 85% inactive management. So that's all driven from the liquidity of a zero interest rate policy over a decade, which has now ended. And so if the Fed raises rates 2 times this coming year, which we predict at SkyBridge that they will, market's not ready for it. And so it will rock in a way that it was rocking in the fourth quarter. And so to your point, which I totally agree with, we're going to be overdue for a recession, and we're overdue for another illiquidity-based situation. And so that's going to set back, in my opinion, the efforts that you guys are making in crypto and in blockchain. It'll set it back. But that will also provide an opportunity for people to come in there and make greater and wider investments.
So why it is a setback for capital markets on blockchain?
Because what happens is when the world comes to an end, unfortunately, you should be running towards those securities to buy them, but that's not what people do. They get very, very scared, and they start moving their money into riskless assets. And if you look at what happened in the fourth quarter of 2008, we had a 10% drop in U.S. GDP, and we had a massive migration and flight to quality. And so, unfortunately for you guys in this business, this may be the most stable business 15, 20, 25 years from now, but it's still a very nascent business. And so what will end up happening is there'll be a flight to quality, and this side of the financial innovation world will be neglected. I'm not saying permanently, it'll just be neglected temporarily. But we've set ourselves up by accident by eliminating all this capital from the marketplace. And so, go try to tell a regulator in Europe or the United States that the volume that they're seeing, because you're seeing massive volume, and you know this from your high frequency trading study, you're seeing massive volume, and so the regulator thinks that that's liquidity. It's not liquidity. Liquidity is when there's a very big sell order and the market's stable down a quarter, down a half, not down 8 points, because some algorithm and some artificially intelligent computer says, okay, I can see the order coming in, I'm 5 milliseconds faster than this other guy, and he drops the price. And so it's a very, very dangerous marketplace for inactive investors right now. Just something it's worth noting.
Yeah, I can only agree. We see that also in the market structure.
If more markets are investable and more asset classes are available for investments, so in other countries, in Asia, in China, could this soften bubbles? So soften maybe bubbles in markets which looks like the most accessible and most desirable? Could it be there's just a flow of liquidity to new markets which are now more liquid, more accessible, and perhaps transparent?
In my opinion?
Anybody's.
Yeah, well, I think in the future that's the case. It's just we're not ready, we're not there yet.
So I can only confirm what Anthony was saying, that also there's a lot of academic research that shows that when you get a bad shock, the money flows to dividend-generating companies that have been around for a long time. Now, you have to ask yourself the question, and the president of Bulgaria pointed out the public utility, as we call it in economics, of blockchain-type solutions. Why don't central governments then pick up the investment into this technology if it's so important? Do you see that happening? Is there a business case for it?
Absolutely, there is a business case. I truly believe in this, and I'm fighting in my country for a program which is approximately a 50 to 100 million euros program to introduce three basic things. The one is e-government, and the other one is e-voting, but e-voting has to be based on blockchain. And the third one is trying to look at those companies who are really digging into. They find it very difficult, really, for the moment, to give a hand, because governments give a lot of accelerators money, high-tech parks money, but in the virtual world, and those companies don't get it at all. So what I'm trying to do is at least to raise the awareness, to bring a practical point. For example, we have 2 million Bulgarians abroad and 8 million in the country. Those 2 million, 500,000 United States, 400,000 Germany, spread all over the world, they don't vote. And on top of that, everyone believes that voting in internet now is totally manipulated and so on and so on. And I think blockchain can help big time into this. And we are facing a situation that those 2 million Bulgarians who are very well, it's middle class, very well integrated in the United States, Germany, whatever, good people, democratic people, they want to vote, but they cannot. And I'm trying to make it a case. I'm trying to bring the government into investing into such a vehicle together with the Bulgarian Blockchain Association. Those are just first attempts to make it as a case. And I believe we are right there. We believe we have something. We brought something to life. Now, from a baby, it has to become, like a visible human being or technology that makes sense. And it's not easy, believe me. But here is a magic word: corruption. Politicians are so, I have to say, so many of them in the gray area. All of them pretend they're fighting corruption, but I don't think they're bringing sustainable solutions to fight corruption. And blockchain is such a solution, and I'm trying really to make the case, not just in Bulgaria, but I travel a lot in the region. You want to fight really corruption? Why don't you introduce blockchain-based technologies? Here's a simple point. And the moment of truth comes, do you really want to fight corruption? No. So we can make a case, but it takes time.
But it's interesting that if I'm in my country, actually, we had electronic voting for a while.
Yeah.
Because then it got turned back to paper voting, because with paper, people actually see collections of paper. You can monitor the collection of these buses, and it's in some sense it's harder to do massive manipulation if everything's it's got a paper trail.
And
whereas here,
I mean,
we could all agree that this is super secure. Now it's not us that ultimately need to trust what's happening at the voting booth. It's the Bulgarian citizen or the Dutch citizen. Now, how do we get there? How do we get to convince these people that this is technology to be trusted? Difficult one, I think.
We need to dig. You want to give me an example? Let me give you an example. Henry Ford was a guy who actually was pretty communist in his understanding of how the world lives. Remember, Henry Ford was building up in Detroit such a city where people could live in a decent way. He was taking care of workers. And of course, he was a symbol of the Industrial Revolution, where Henry Ford was saying, I love all my customers, but as long as they offer order, black, Ford, because there was no other color. Henry Ford, if you remember very well, was the guy who also hated drinking alcohol. And he was starting to work hard on how to prohibit drinking in the United States. and he found a way to do so. So a president came, heavily funded by Henry Ford's foundation, who promised if he's elected, he will ban the alcohol. But then what happened after alcohol was banned on the day one? And if you remember very well the case, hundreds of thousands of producers of alcohol and hundreds of millions of liters of alcohol became arrested on the second. A very young, smart immigrant from Belgium called Dupont de Nemours, just freshly immigrated to the United States, went to Rockefeller. He was just a small employee of the big bank and said, I have an idea. Why don't we start working on a plan for how we can lift the ban? But before that, we buy all of them. And I don't know if you know, but they bought pretty all of the producers for nothing. But it was a very smart idea of this guy, Dupont de Nemours, who initiated an American movement of women against the alcohol ban. The point is, I don't know if you know about history, but the point is that American women were fed up with their men who want to drink, going to some special places where they drink, but also there were a lot of easy women and this and that. And in order to save their families, there were 7.2 million members of the American Women Against Alcohol Ban Club. There were manifestations in Chicago of hundreds of thousands of women. And one day a president said, not a candidate president, listen, are they all going to support me? Yes, I will do this. So in a way, it's a long game. But if you believe that what you do is right, there is always a way to make it as a case and work on that. And I believe that young people are, and young people's hearts are very important in fighting for. Industries to the future are very important to fight for. And politicians, and look at the Bulgarian case, by the way, 2 million well-educated abroad, they're not important for the politicians. Because of that, we don't bring a solution how they can vote, for example. But those who stay in the country, who are core voters, you know how they will vote, they're old-fashioned, they're not interested in blockchain, we stick to them. But what if we get young politicians on the table who can probably make it as a case and who can promise working solutions against corruption? And one of those working solutions against corruption definitely is the blockchain-based technologies, I believe, because it brings 100% transparency. Listen, today governments spend, for example, just one last example, energy sector is a national security. And because it's a national security, you spend hundreds of billions of dollars with 100% untransparency. Energy sector, wherever in the world, is just a total gray sector. What if you just have a young and motivated politicians who say even the energy should be transparent? And because of that, why don't we just put energy contracts, annexes, whatever it is, make it transparent? They are very simple solutions if there is a political will, and probably it's good to fight for that. It's a tough game, but it's a good idea.
Great. So we will vote via messengers, probably. You don't need to come to electoral pool, and you don't need different parties to double check if ballots are calculated properly. Yeah, this blockchain does this. And state finance could be, state spendings could be easily monitored and tracked and so on. So it's changed the incentives for politicians a lot. So if we turn back a bit to this bubble problem, right? That the huge inflow of money and all goes into the best economy, right? And create a bit high valuation, which then kind of correct. And what if a blockchain enables better and more smart and fluent capital flow to other countries? And could this prevent bubbles in the US?
a phenomenon of the global financial world in the last 20 years is that we are seeing what is called a global financial cycle, which is set by the US, and in particular US monetary policy. That just as a background, what is the global financial cycle? The fact that when the US monetary policy changes, it sets off either a credit boom around the world or a credit bust around the world. And there's a massive amount of credit that flows into, even countries which don't need the credit flows, and that creates these bubbles. So we've seen a lot of synchronization of assets across asset classes that are highly correlated with what the US monetary policy is doing. So that's the global financial cycle, and has very much to do with the dominance of global banks recently and just the change in the global financial architecture. So that's the backdrop of the context that everything is synchronized anyway. Now, what blockchain, is there a possibility for blockchain to help with countries to stop these credit flows coming in when they're unwarranted? Would be a massive benefit to these countries. Because frankly, you see a lot of emerging markets going into crises just because they had a massive credit and bubble when it was unwarranted and because there was massive liquidity in the world. So that's a question that I don't know the answer to, but potentially more heterogeneous and contained kind of capital flows will be a benefit to the global financial safety. I guess one point that I would bring in is if we think about, what is this, the decentralized financial system, we have to think about some of the core issues, core frictions in the financial system itself, which is information friction is one really important part of it. If you have, let's say, tokenization of various assets, you make it available for various kind of people to purchase them. Information is a very critical aspect of this, and there's asymmetric information. What is the classic economics problem, the lemons problem, where you have, different qualities of assets being pulled together. How do you select them? How do you distinguish them? And if you're offering these kind of assets to financially literate people, that's one thing. What about just people who are less knowledgeable about financial assets and much less knowledgeable about the particular asset that is being offered? So I can see a huge amount of benefits being provided of financial decentralization, but how do you solve the information problem? And whether blockchain, precisely because of the transparency, the decentralization, can bring about, can reduce these kind of frictions is also one thing. But if not, then you can imagine people really not understanding what they're buying and then creating bubbles where it's unwarranted and things like that.
Yeah, is it the point to cut access for less educated people to invest into venture asset classes?
But do they know? Right?
Yeah, because they are not educated.
I think along with the offering of good products, and here I think the essence of the issue, and along with how to convince government that this is really something very powerful, is that it must bring high quality products. And so along with that offering, it has to be financial service knowledge of some kind, I believe.
Okay. By the way, who thinks that less wealthy and less educated persons shouldn't be allowed to invest into venture asset classes, such as startups, such as private companies? Who thinks that there should be qualification? Nobody, but in fact it works. Yeah. So the current regulation says that you should be qualified to invest, right? And there is a reason for this. There's a lemon problem. Yeah. So.
Well, it's called gambling if you don't know what you're doing.
Yeah, or gambling. So who thinks that this is a right way
You don't
to
put
solve this
less
lemon problem,
educated
to cut
people-
access?
You don't open up less educated people to invest. That's gambling. That's not the point.
Yeah, but
You're trying to create. If first of all, we've been in blockchain since 2014, and I've never heard blockchain get put in front of every single word and solves every single problem. Technology is not going to solve human problems. It's not. So
Yeah, yeah.
yes,
So-
you have technology. We have more technology we know, and global worker productivity hasn't improved, period. So technology is not fixing things. Blockchain is not going to fix government. We are. We have to do that.
We are.
Jesus. We are not going to be opening up to uneducated people to invest in venture capital. It's just not going to happen. Nor should they. You want information flows coming to them to be educated decisions. If you want access to private equity, which is probably one of the better returning classes, you got to be KYC'd in the United States. You got to have at least $500,000. The reason for it is the government doesn't want people blowing all their money in assets that take a long time to get back. So if you can use the blockchain to decentralize it and give it access to the people that are KYC'd at 500,000, because most private equity firms won't even look at you unless you write a $10 million check. So you don't have access to that asset class. But if you did decentralize it and you could create a pool of capital where people that have 500,000 can participate in it, you're still within the regulation, and you more than quadruple the private equity space just by doing that.
There's another aspect. Another aspect. First of all, I agree on the principle.
Yes.
I agree on the. Now, hi. Apologies for being late. I'm Sofinzon. I'm an entrepreneur in the blockchain space and also a founding partner of True Global Venture, a decentralized VC. So this is an aspect that concerns us. I think first of all you're right on the aspect. There are two aspects to it. Number one, if we're looking at the return of the venture asset class in general, it's a failing asset class. So we can't generalize and say that accredited investors or venture capitalists in general actually know what they're doing, because the vast majority of them don't. As they don't return, you're much better off put your money in an S&P. So you have to be an extremely rare breed of venture capitalists to actually know what you're doing. The second aspect of it is the introduction of liquidity. So when you're actually introducing liquidity to both on the side of the venture fund with the LP as well as for the startup, it gives an ability to investors on all sorts to basically return their money whenever there are. Now, liquidity and the asset class in general are not going to solve humanity. On that, I agree with you. So that's a very good point. But the introduction of blockchain enables us, and the introduction of the tokenization in general enables us to do things that we were not able to do before. So let's at least recognize that. And with that, let's create a better financial system with more transparency, with better liquidity, etc.
I still think we have significant problems, right? Venture capital is a broken asset class, so I don't disagree with that.
Agree.
Only the top quartiles return. I don't disagree with that. But I look at we are swallowing up ICO companies because they raise too much money and they don't have a valuation. So that system is broken too.
Sure.
So you have a lot of things that you have to think through. But blockchain decentralized is not going to fix venture capitalists. You actually have to have someone that understands what they're investing in. So the venture capitalist is the person making the investments. The capital is secondary to that. So you have to have guys that know what they're doing. And even then, 1 in 5,000 startups get to $100 million valuation. That's not saying they're successful, they just get to $100 million valuation. So how many are entrepreneurs in this room? All right, every one of you didn't get past the 1 in 5,000, so you're out, right? So now we have to get back to, if you're going to be in decentralized space, which I agree is going to become pretty powerful as the technology gets up to it, but you actually have to have fundamentals in your business. You can't just say, I'm building a blockchain this. Who's going to use it? Why are they going to use it? And I will promise you, there is no way in at least the next 20 years people are going to be using tokens. We have plenty of credit cards and other forms of payment that work just fine. Now you can tokenize things, and I agree with that, and you can have governance, and I agree with that. But this idea that everything is a token, what is the commercial model? How do you make money? I don't care about your token, security token, food token, fish token. Tell me how the business makes money. And the problem we have, and why I have so much energy, is we look at these companies, and most of them fail on fundamentals. Simply put, if you're going to go do a decentralized company, tell me what the decentralized tech is doing that the centralized tech can't do. Start there. then tell me what that decentralized tech creates, what commercial model it creates. I ask entrepreneurs that, they can't even get through the first gate. So that's the push we should have in this room.
I can give you an example. So today you can list your equity token on a LATOKEN in one day and make it available for 6 billion internet users for trading. However, the regulation is that only qualified investors can trade securities which are not publicly structured. It's like A in US, and the level of income should be like $1 million to get access to trade these securities. And the reason for this is that because they can to take risk of lemon, or they're educated enough to solve this lemon problem in some way. And this is something you agree with. You think that there should be some ban of access for less wealthy and less educated persons.
Because if you don't do that,
because it's a gambling.
You're going to create massive fraud.
Yes.
Because people are going to create companies
Massive frauds.
and they're going to defraud people out of money that don't know what they're doing.
Yeah.
That's why we have some of these regulations that we need.
Yeah.
So.
And what about elections?
Well,
Shall we cut access for less wealthy and less educated people to invest into politicians with their votes?
Elections. I wouldn't confuse investing with elections. Elections are based on people voting in their countries and whether they're paper or digital. Yes, there's fraud, so yes, you can fix those. You don't necessarily need a decentralized system to fix fraud. You just put reputable people that are maintaining it. So I wouldn't confuse the election scenario with investment scenario. I feel if you create coins and you give it out to people and say, hey, invest in my company, you're going to have a lot of bad actors there.
Yeah, but there is a dilemma. Either you give people to get experience and learn how to vote to survive in the future, and maybe the same works with investment. Maybe you invest into education of people and help them to learn how their decisions influence the economy, influence their value of their portfolio, and then they're better educated citizens who understand how economy works and who understand how actions of politicians, of regulators, of companies influence economic growth and their wealth today, now, immediately, because they have stakes. Yes. Okay. Actually, I am moderating, so I just give away my chair. Yes.
I want to answer the question.
Okay, one question.
Okay, so the question was basically, should non-accredited investors be allowed to participate in offers? And then I think you posed the query as in, if they have more than a certain amount of money and are educated, then they're qualified to invest. That correlation is false. Okay, as a matter of fact, most of the higher educated people have higher income, yet less wealth, all from investing. Okay, many high income earners, such as doctors, are victims for the highly regulated industries, such as brokers, small and medium-sized brokers, even the large ones, Goldman Sachs, etc. Number one. Number two, the advantage of using a decentralized system or a distributed system is you lower costs. If you lower costs below the structural inefficiencies of the current system, you have greater efficiency. The structural inefficiency of the current system is they're overcompensated. Investment banks pay between 35 and 60% of gross revenue in compensation. I create a structure, right, below that 30% margin. It's cheaper for everybody involved. Investment banks can't get involved. If they do, they have to cut costs. Better for everybody involved. Those costs are not distributed between shareholders and customers. The investment banking industry, Wall Street, is the only industry in the world where the employees make more than the owners of the company. That answers both of your questions and the query that you posed.
I don't think there is a disagreement with Reggie, my friend Reggie there, about the distribution of wealth, distribution of capital across many more people. But I think to my new friend here, that I don't know yet,
It's Jeff.
that he made the point that the fundamentals remain fundamentals, meaning that it's not blockchain or any other technology, for that matter, that will make a bad company a great company, and the other way around. So we all, I think, are here because we believe in creating this new decentralized system because it's better, it's more distributed, and therefore less, I would say, proponent to have these ups and downs potentially, more resilient maybe to bubbles in the future, and so on. But bad companies will remain bad companies, and you need to look at the underlying fundamentals of the company, the quality of the entrepreneurs, the quality of the market dynamics, in order to assess whether it is a good company that will actually make it and will become the next I don't know what, or not.
But the problem is being judged on market valuation, which is not economic. Look at Twitter, which can't break across this. Look at Snap. Look at WorldCom. I can go down the list. So market valuation does not equal economic quality. Market valuation equals how much a particular bank was able to pump to really support liquidity of a stock.
Can I
Look at economic quality earnings.
Can I just add an observation, because I sort of see the points that were raised, but I wouldn't go as far. Maybe I'm a liberal from Holland to just tell people you cannot invest in cryptos because you don't have the money and you don't really know what you're doing. Because I think that it's important for these people to have access to this technology. And it's every time that you have financial innovation, it was pointed out already that there is you plant the seeds for 1,000 flowers, and indeed one out of 1,000 will make it. But that doesn't mean that I can't buy all of these companies and then benefit from that single flower that made it, and that became a new Google or whatever it was. Because if we talk about income inequality, and that's where we started, and we have these people that don't have the wealth and didn't go to school for whatever reason, and they can't participate in these growth companies this way, then we're never solving the inequality issue at all.
The problem
so
is
I don't.
They don't have to tokenize to participate. They can buy equity. Anybody can buy in the open market.
The problem. How do you
should be allowed to pool?
How do you protect the grandma from the street to put 50% of her savings into a startup that has a very, very high chance to go bankrupt? That's the point as well.
Can I step into that?
Of course.
Okay. I tell you a story. End of the 90s, my grandmother called me one day and said she's becoming a trader now. She's going every day to the bank and she looks at the TV and she buys stocks. It's like, I think it's not a good idea. So she went in the morning with the crutches to the bank, which at that time opened at 9 and closed at 12. What year? That was, I'm coming from Germany, so we are a bit behind in technology. That was like 96, 97. Of course, it didn't work out because one day she found out about options. I thought that's even cooler because I can do much more. So that was one story. Now I look at her portfolio, and what do I see? I see standard products from banks, which have high costs of compliance, which I see all the time, where I think, so what's the benefit even for my company, for my funds, when we have got calls with the directors, with like 20 people on the calls, auditors, directors, compliance people, whatever, and I have to pay all of them for the protection of the investor, which of the end result is that all these people sitting in the standard normal products. So I think we need to find ways that people can invest in a very diverse range of assets. Sure. The question is only, how do we regulate that? How do we do that? And I think the current way, where we have basically moved from very low regulation to extreme regulation in all fields, which probably is going to at some stage turn again. We have to find more solution for that. So I don't necessarily agree to block it and make it dependent on certain asset size, etc.
I don't think anyone around this panel wants to stop this thing. At the same time, we really have, because this is the only way that the regulators also, on the other hand, is going to allow entrepreneurs and funds like here around this panel to basically create this revolution. The only one question that they have in mind, that how do you protect investors? People around this panel
I'm a bit cynical about that. I'm not sure if that's really at the heart, the idea they have.
At the end, they are. they have done mistakes also in the past. We all know, but I think that when you're talking to regulators in general, I think it's their primary concerns. They don't necessarily know what's the best way. They don't have all the answers. They're learning about blockchain. They're learning about these new things. But at the end of the day, they really try to do the right thing for the protection of investors, and we should do the same.
Sorry, guys, I can't listen to this. They divide and conquer what is done since thousands of years with us. I'm feeling myself like in Monopoly. You know what's Monopoly, the game? You play it, and at the end, you actually already know who's losing, but you have to play it until the end. What is changing this world we are living in is actually two things. And the very first thing is collaboration. I can give you a good example. When you look into cybersecurity, why the hackers win? Because they collaborate. Why governments lose? Because they don't collaborate. I just was at a security panel, and the colonel told me in the Afghanistan war, wherever, they had 7 computers because even in between the armies, they couldn't share information. So collaboration is one very important point. And the second, sorry for being the bad guy, the second solution is we need to get rid of maximizing profits. Companies are winning and we are losing because everything is built on maximizing profit. Sorry for being the bad guy.
Not the companies that are looking on the long term. Not companies are looking on the long term. They're not. If you look at the performance of the companies that are today, the leaders of today, okay. For example, Amazon.
Like Google, who said before we are the good guys. And
No.
we are the bad ones?
No.
What am I talking about?
I'm answering your specific comment about maximizing profit. Okay. When did you see Jeff Bezos, for example? And I'm not saying that Amazon is, the white knight that is going to save the world. It's not. I'm just saying that the maximizing profit has never been the mantra of Amazon, okay? And it has created a lot of wealth for that. Maybe for the shareholders, maybe it's not shared across, maybe it's not distributed enough. The second thing that you said about cybersecurity, I believe it's incorrect. It's not collaboration that I've been in cybersecurity some time, yeah. And you know as much as I do that it's not collaboration that makes the hacker successful. You know what makes the hacker successful? It's because it's an unfair war. It will always be an unfair war. You have to protect your system 365 days, 24/7. The hacker needs you to fall asleep for 5 minutes. That's why they can collaborate and they can do much harm. That's why we as an industry, we need to step up in terms of security measures and other measures.
So I just want to say 3 quick things, and unfortunately I have to leave because I'm speaking at something else, but 3 quick things. Number 1, the future. The only thing we know with certainty about the future is that we cannot predict the future. And so we're all going to have anxiety related to that, and that's just an axiomatic fact. The second thing is, as it relates to our technology, today, as of today, the technology has never moved faster in mankind's history, womankind's history, than today. And as of tomorrow, it will never have moved slower because it's going like this. And so when we're sitting here thinking about where the future is, the human mind, because unfortunately every person in this room is trapped in a 100,000-year-old piece of machinery that has not had a software upgrade since the caveman. It just hasn't. Your iPhone went from iPhone 1 to iPhone 10 in 10 years, but you're living in the same evolutionary piece of machinery. So what we're designed to do often is to think very linearly. We were taught in the mid-'80s when I was in college that we were running out of oil by 2010, and we were going to have peak oil theory. And then we had an economist say that the world was going to die from starvation. Thomas Malthus, the English economist. And yet more people are dying from obesity-related illnesses than from starvation. And so I just want to make this last point, and then I'll shut up. I think we have to be very, very careful about where we think we are going, because I can guarantee you, to everybody in this room, And I know this about myself because, believe me, there's been a lot of things in my life that I didn't think were going to happen that actually happened, okay? And I'm going to tell you right now, you don't know where we're going. But if I had to make a prediction, this will be a wonderful technology for mankind. But the politicians, sir, they're not going to use it because they don't want the people voting. They really do want the lower voter participation so that they can stay in power. I mean, that's been the design in America for 50 years. And here's my last point. If we lose faith in our systems, and we lose faith in profitability, and we lose faith in democracy because of the divide, I think we're making a very, very big mistake. I think that our generation, for some reason, decided to take more economic rent out of the pie than what Henry Ford was doing in 1908. And if we move too far away from free market forces, which have lifted billions of people in the world out of poverty, and we start thinking about it in terms of less profits, I think we're in danger. And so I'm just wondering if we can have a cultural shift where people at the top actually condition themselves to take slightly less, like Henry Ford did. I have to go, so I apologize. And I appreciate you letting me talk.
Thank you. Yes, we are a bit out of time. However, just
It didn't
Anthony.
last 11 days for me, but it was
Yes.
very enjoyable.
Yes, Anthony, one question for you before you leave. Yes, we are about a bit out of time. So, would you? So, one of the source of this uncertainty and dangers is called income inequality, and rights inequality. So, and there's asset class which returns more than 20% for decades. Correct me if I'm wrong. It's a venture asset class. And there are some people who do not have access to invest in it because they are not well educated and so on. So would you prefer to keep them kind of cut from this, to have less rights to invest, or you prefer to invest into fraud prevention, including marketing practices prevention, fraudulent prevention, and invest in their financial education? What is the better option?
But let me frame my answer by saying as follows. I grew up in a blue-collar family. My parents did not go to college, okay? When I got into Harvard Law School, my mother thought it was Hartford Law School. She's like, "You're going to Hartford?" I said, "No, I'm going to Harvard." "Oh, it's in Hartford, Connecticut?" I said, "No, Ma." Okay? I'm telling you, you think I'm making that up? There are Italians in this room from the United States. You know I'm not making that up, okay? So the reason I'm saying that, the entire area that I grew up in, nobody went to college, okay? They were laying sheetrock, they were laying cables, they were landscaping lawns. And so, I experienced something in the 2016 campaign that changed my life. You know what it was? I spent 30 years going up the spire of financial independence to get to where I am today, to show up at a place like Davos. But I started in a polyester suit at my first interview at Goldman. The guy looked at me and said, "Dude, you're fully flammable. You got to go buy natural fibers." I just want to explain to you where I was, okay? So I'm telling you, I know those people. What we need to do for those people is something that I was hoping the president was going to do, okay? And he's not doing it, frankly, because it's too hard to do alone, okay? And I've said this to my establishment friends that are in the political world. Stop calling these people deplorable. Stop calling them white ethno-nationalists and all this other stuff. Start coming up with policies that provide equal opportunity. Because in this room that there will never be equal outcomes. Because Jeff Bezos is going to be born and he's going to dominate the earth. It's just the way it works. But we have to work on equal outcomes. You do that, I'm the product of a phenomenal public school education, and I'm able to sit here today because of it. But I can tell you right now, in a lot of the neighborhoods that I'm familiar with, if you go to those zip codes, they cannot get the public school education that I got with two working class parents. So you want to fix the thing? Let's move those people from the desperational working class to the aspirational working class. And we can do it. And it's not going to hurt anybody in this room. There's enough food and clothing and airplanes and gasoline for everybody in this room to still do that like Henry Ford did 100 years ago.